you mentioned obviously the investigations into racketeering with J.P. Morgan, and the gold and silver futures market. Um, what has your research told you about that situation? What do you think is going on there?
Well, I think that it's pretty easy to say that for the past 12 years, they've been the largest short position on the COMEX market, while using that short position to massively accumulate what amounts to the largest physical position of gold and silver the world has ever seen. Interestingly enough, the COMEX is quickly turning into a delivery mechanism, and that's something it was never meant to be. And that is going to limit the ability of JP Morgan to continue, or any of the central banks to continue to manipulate the price. Because in the case of JP Morgan, on the COMEX market, they had 160 million ounces of physical silver, so which was about 20% of the COMEX market. They were able to, the other side of that, if you have a physical position in stock, you can short on paper the other side and consider it a hedge, or call it a hedge, which is not really what they were doing, but it gave them the ability to claim that was what they're doing. What it really gave them the ability to do was pickpocket the market, to control it, to continue to short it and knock down the price. Bottom line is that last delivery month, there were 30 million ounces of their silver that stood for delivery. In other words, people who took the other side of that short contract stood for delivery, and that's very unusual. And that just cut off at the knees 20% of their stash. I think the days of them shorting the market are coming to an end. Not only are they long, but I think all of the banks who try to short are going to have to deal with the fact that people are going to stand for delivery. Normally, these contracts just roll over. Now people are standing for delivery, calling them on the carpet. Very, very quickly, that'll change the landscape. The August delivery month, I think, will be something to behold in terms of what we see. And, in both gold and silver, I think the short game is coming to an end very, very quickly. That will set prices free. But, when you take a look at what JP Morgan has done, they've killed every rally for the past 12 years. There is a interview that everyone should listen to. It's on YouTube. It's by my friend Chris Marcus. He interviewed Bart Chilton. He was one of the former CFTC governors, the head of the Commodity Futures Trading Commission, where a week before, or 2 weeks before he died, he gave an interview to Chris where he basically admitted that JP Morgan had indeed been suppressing the price, had been manipulating the price, and he wanted his superiors to throw the book at them, to prosecute them. He was told, no, it's a political decision, and to back down. And then he died 10 days later or 2 weeks later. But the bottom line is that what we've seen since 2008, when JP Morgan inherited Bear Stearns' short position, was 12 years of unmitigated manipulation. And so much so that, get this, in 12 years, thousands and thousands and thousands of short trades, every trade selling short, every trade selling short, every trade selling short, every single one, they never lost a penny, not one. It's all public information. That's a mathematic impossibility. And I know you're talking to me from New York City. Pick your favorite Yankee. Assume that baseball was going on since April. In a Major League Baseball season, a player, typically a starter, gets about 500, 600 at-bats. So that's your favorite baseball player for the Yankees getting 600 at-bats and never, ever, ever striking out. Never, ever, ever flying out, grounding out, sac fly, nothing. That's like going 600 for 600. It's impossible. Yet JP Morgan found a way to do it. So, I think this is a situation where, when you look at the fact that they had carte blanche, never lost a penny, made all of that money on paper, the physical acquisition that they have done on the side is really what's telling. In other words, they've proven they can make so much money they don't need to physically store 1 billion ounces of silver and 25 million ounces of gold, the largest physical position the world's ever seen. I would argue that they held down the paper price to accumulate that position. And now they're getting called on the carpet by those trying to pickpocket their stash by shorting it, because no one ever did that. No one ever stood for delivery on those short contracts, and now it's becoming the rule, not the exception. I think things are rapidly changing, and I think those people who have been frustrated with gold's performance and silver's performance will wake up one day to find it has gotten away from them. And people like me who have been like the little boy who cries wolf, at the end of the story, don't forget the wolf comes. And the CFTC doing nothing about it has been very frustrating. Maybe the Justice Department this time will. And the fact that 6 of their traders have already been indicted with racketeering charges and the investigation is ongoing is very encouraging. So I did hear just recently that they have been instructed to get in line with position limits. They have been far in excess of position limits for a very long time. And that was one of the things that Bart Chilton wanted to go after them for. Bottom line is JP Morgan is an extension of our government, of the Federal Reserve. They have been doing their tidings for a very long time. But this is a global market. The COMEX sets the price for the rest of the world. And I think the manipulation is now has too bright of a light shone upon it. And I think it's time for gold and silver to reflect their real value. The only way that you can successfully manipulate a market over an extended period of time is to push it in the direction it is going. The whole world is looking to gold and silver right now as an alternative to paper investments to protect against the volatility and the uncertainty of what's happening. And I think that frightens the short players right now who are caught in a jam. And I think it's going to be an interesting second half of the year. The confluence of events that brings us to ultimately to the election, to me, is a backdrop that should light a fuse under the price of metals. So right now, honestly, I feel we are in the eye of the hurricane. And I've been saying that a lot. After witnessing what we saw this spring and winter, high prices on metals, inability to source it, broken supply chains, and then leading into the social aspect of things here in Minneapolis, the global epicenter of insanity. I am very concerned about the trailing edge of the storm that's coming next. So I've instructed my operations department to go onto our line of credit and spend millions and millions and millions of dollars and buy everything that's not nailed down. Because I think that as September, October, November roll around, if the last few months are any indication of what's going to happen when this high stakes election comes to the forefront, along with kids going back to school and a second wave of the virus and all of these things that could really screw up the economy and create more havoc socially. I think that people should really wake up and take a look at this time as a time to prepare and as a time to get their house in order, because I know that's what we're doing. And I feel that the trailing edge of the storm is going to pack as bigger of a punch as the front end did, which we had no idea was coming. And we should all think that it is coming on this side, and to bury our head in the sand and think that things are just going to be great second half of the year going into the highest stake election we've had in a very long time. I would say they maybe should reevaluate that thought process.
Yeah, definitely. Well said. Yeah, so you mentioned that the JP Morgan trading desk was inherited from Bear Stearns. They've been doing this for more than 10 years. What do you think is their agenda beyond just, like you said, acquiring more precious metals for themselves and keeping the prices down? What's their end game? Are they trying to corner the market? Are they trying to what do they do after they corner the market? They're just trying to buy more gold and silver for themselves. And who's behind?
Banks don't want to make a one big hit. Banks want to make money quarter after quarter after quarter, and that's what they've been doing. They're greedy. They're a profit center, and they want to make lots and lots of money, and that's what their agenda is. And they don't care if they violate antitrust law or break rules. They just get slapped with $1 billion fine here and a $700 million fine there, which amounts to a couple days worth of trading, and that's it. It's no big deal for them. They're a profit center, and
Yeah.
I think their agenda is to make as much money as possible at the expense of everyone else around them. So it's very cutthroat. So I don't know. I think that they wouldn't go to the trouble of amassing the largest physical silver position the world has ever seen, amassing north of 25 million ounces of gold. They would not go to the trouble of holding it and storing it when they've proven they can make unlimited money on the paper market, if it not for to be a big part of what comes next. It's interesting that they did all this prior to the revaluation of gold as a tier one asset, almost like they knew something was coming. And they made all this money on the downside. They'll make just as much on the upside, maybe more. They'll let it run. When they let it run, look, with 1 billion ounces of silver plus every dollar it runs, they make $1 billion. So talk about ringing the cash. When you talk about silver at $19 an ounce, you're still roughly 2.5 times under its all-time high. And so there are very few investments on the planet that you can buy that are trading at 2.5 times under what it was priced at in 1980. And I think that this is, I would argue, the best investment opportunity on the planet right now, where it is low risk, high profit potential, tremendous privacy, liquidity, and flexibility. All of those things are found in silver. And when you look around you at the alternatives, you see a bond market that is a walking dead. You see a stock market that by every single metric, as measured against the real economy, is as overvalued as it's ever been. We see Fed-induced asset price inflation, courtesy of the last 12 years of easy money since 2008 and low interest rates, that has created wicked bubbles and distortions in real estate, stocks, and bonds. And they are all positively correlated, because if interest rates rise, they all collapse. In fact, there's a group called Ibbotson, Ibbotson, that was bought by Morningstar. Morningstar is the large mutual fund and stock rating group. They just value and research mutual funds and stocks, give their opinion on it. They came out and said that there are no inversely correlated assets any longer to the United States stock market, with the exception of gold. In fact, all of the other things are positively correlated, and that used to be the opposite. It used to be stocks were risk on. You acquire them when you're working. As you get close to retirement, you sell them, go to risk off, which are bonds. And the bond market now is the mother of all bubbles. The Fed funds rate, which is the interest rate, the futures market and the Fed funds rate has us going negative into January. Now, I don't know if that'll happen, but the futures traders are saying, hey, we could go negative into next year, negative interest rates. But at 0.6%, as we were saying earlier, on the 10-year note with inflation running much higher, we're already negative. So the bond market is the mother of all bubbles. The stock market is as overvalued as ever been, as is the real estate market. And God forbid interest rates rise, all three collapse. The only inversely correlated asset on the planet any longer to the U.S. stock market and arguably the U.S. dollar would be precious metals. It's imperative that people have a position in their portfolio of gold and silver for that reason, and that reason alone, on top of the fact that the most sophisticated, well-funded, well-informed, influential traders on the globe, from J.P. Morgan to the central banks, have been wickedly accumulating it for a very long time, especially since 2018. And the revaluation of it as the only other tier one asset in the world, truthfully, is about as big of a deal as could be in the world of finance. And for people to miss this will be a once-in-a-generation opportunity to protect themselves and to profit, and to be in the front seat of a new system that's going to unfold. And I know it's going to have a underpinning to gold some way, somehow. And don't forget, there's a 90% correlation between gold and silver throughout all of history. So
Yeah.
to me, gold is imperative. Silver is the finest investment your listeners could make, period. And maybe of a generation. And I truthfully mean that. The fact that I sell it, I'm objective. We've never had a customer complaint in 30 years, ever. My company has been around since 1989. We've done 6 billion in sales. Go on Google, you won't find a customer complaint. I don't speak about these things to try to drive business. I speak about them because I believe it. We're one of the largest precious metals companies in America. I don't need to try to convince people to buy something on a disingenuous basis. I will say to you, I truly believe that gold and silver right now are the investment opportunities of a generation. And so I think anyone who doesn't have a position in them is making a mistake, as the central banks and the commercial banks are showing it's really important to them, and they are the most influential traders on the globe.
Yeah, exactly. Yeah, so